Hello everyone and welcome to Momentum channel. My name is Mo, and in this video we're going to be talking about our journey to reaching financial independence through investing in the stock market and building a dividend and growth stock portfolio. If you're new to this channel, my name is Mo, and here on Momentum Finance we talk all about investing, finances, and ways to reach financial independence. Welcome to this channel. Why don't we get into this video and talk about where our portfolio stands as is. All right, as you can see here on the screen, our portfolio currently is showing a total market value of $384,970, close to that 385,000 mark. Definitely, we are happy with the growth of this portfolio compared to last week. Now, this portfolio is showing a positive return of 2.19, close to 2.2%, or up close to $8,200. Not bad, eh? Now, in terms of our holding, last week, I shared with you that our goal was to add one new position to this portfolio, and that would have been XIC. It's another index fund passive ETF that allows us to get more exposure to Canadian high-quality stocks. We did have another ETF called VDY, whereby through that, we got more exposure to high-quality Canadian dividend-paying stocks, but we didn't want to limit ourselves to just dividend-paying companies in Canada. With XIC, our newest edition, we get more exposure to almost the entire Canadian stock market. Some of the best renowned companies in Canada, and those that are actually traded through the Canadian stock market. We've added to our shares of XIC. Currently, we have a total of 73 shares of XIC, and it is currently up by about 0.5%. The other big holding right now, in fact, our biggest holding right now, as you see on the screen, is VDY. It is Vanguard FTSE Canadian High Dividend Yield Index ETF. Gives us exposure to about that 47 Canadian dividend-paying stocks. It accounts for 45% of our portfolio. We would like to bring that target to a lower target of about only 30%, and instead invest a little bit more into XIC. So you'll be seeing us put more money into XIC in the weeks to come. Our second largest holding currently is VEQT, which is our Smith Maneuver Portfolio ETF. It's Vanguard All-Equity ETF Portfolio. Gives us exposure to diversified investments in the stock market, 100% stocks throughout the world. VEQT is currently down for us by 6.2%, but we are planning to make it a larger position by about 25% of our exposure in this portfolio. Our third biggest holding is one that gives us exposure to US stocks. In fact, the S&P 500, it's called VEQT. It's another Vanguard ETF. VEQT is Vanguard S&P 500 Index ETF. We currently have $83,869 market value invested in it through our 873 shares between my wife and I, and it accounts for about 22% of our portfolio. Next on our list, our next large holding is VEE, or Vanguard FTSE Emerging Markets All Cap Index ETF. It is followed closely by XEF, or the BlackRock's iCore MSCI EAFE IMI Index ETF. With V, we are getting exposure to emerging markets, and with XEF, we are getting more exposure to the rest of the international markets. They are closely among our top 4 and 5 holdings, with V accounting for $15,513 market value, or about 4%, and XEF as well, close to that 4% exposure of our portfolio. Now, we did have some shares in XDIV in our portfolio that we've actually managed to sell them all this past week, and are using those funds to instead invest in XIC and VDY and the rest of the holdings to reach us to that target breakdown exposure that we would like to see in our portfolio. We do have 425 shares of XEQT, or about $11,000. It accounts for about 3% exposure of our account. And lastly, we are still maintaining that 15 shares of Bank of Nova Scotia. It is only accounting for almost 0% of our portfolio. Because it's down by 3.4%, we are just waiting for it to get to that positive return. And at that point, we are planning to sell all of those shares and instead use those funds to invest in the ETF holdings that we have in our portfolio. The reason we want to actually sell off all of our shares of BNS is that we are already getting exposure to Canadian banks through VDY as well as XIC. There's no need for us to hold these kind of bank stocks separately on their own. It's kind of redundant in that manner, and that's why we want to kind of offload that as soon as it hits that positive threshold so that we're not selling it at a loss, so to speak. Now, with that said, our average dividend yield annually currently is at $10,374. There might be some slight changes compared to last week, given that we sold XDIV, which was one of the higher paying dividend, yield ETFs, and instead investing in some other ETFs. And this fund, as a result, has been kind of adjusted to some extent. We did also add some new funds into the market last week, close to that $2,000 mark, but we had a very positive return for the market, which was very promising. Our average dividend yield is currently sitting at 2.69%, and our dividend per month on average sits at $865. That equates to close to $28 dividend income averaging per day. Not bad at all, and we are very happy with this portfolio as it stands. Now, the plan for us in the week ahead is continue to add funds to our account. We are planning to put anywhere between $2,000 to $5,000 new money into this portfolio. Really, we're going to see how it goes. We're going to be continuing to buy more shares of VEQT through our Smith Maneuver portfolio. We'd also like to buy more shares of XIC to bring that to a larger proportion. And of course, add some to our shares of V as well as XEF, because we want to bring our proportion of the international exposure to a larger balance. Now, to put this into perspective, this is our current breakdown by geographical exposure and our targets. Currently for Canada market, we are getting exposure to 53%. We would like to, at this time, bring it down to 50%. With the US, our exposure is at 33%. We would like to bring it down to 30%. And with international, our current exposure is at 14%. We would like to bring it up to 20%. Over time, we might adjust these targets to some extent. As you know, getting exposure to 50% to Canadian markets might be slightly high, given that Canada is only one of the markets throughout the global economy. So, and given the fact that we are based in Canada, it might be slightly over exposure to it. But for the time being, we've tried to set that target at 50%. Over time, as we gradually hit that target, we might adjust it here and there. So keep an eye on it and see how that goes. As you notice, through this portfolio, really our focus has been investing, for the long term, really investing gradually and consistently, and not really being afraid of the short-term highs and lows of the market, as the market might really pull back or all of that. In fact, those opportunities create fantastic moments for us to really put more money in the market and really take advantage of that and buy more of a shares of a high-quality dividend or growth ETFs that we have in our portfolio and add to our existing shares at lower prices. What are your goals when it comes to investing in the stock market or real estate? What are you trying to accomplish? I would love to hear from you. So leave us a comment down below and share with us, what are you saving towards? For us, we are definitely saving towards getting to that financial freedom, financial independence. Really something that we would like to aim for in the next several years. We'll keep you posted how that goes. We haven't quite set a target that we're comfortable enough sharing it publicly, but we are trying to work on getting this portfolio to a much larger position day in and day out. With that, thank you so much for watching this video until the end. I really appreciate it, and I hope to see you all next time on another video posted through Momentum Finance.